Good morning, one and all, and welcome to this morning's video. So I hope you had a great weekend. And before I forget, thank you to all of the people that have reached out to me and left me messages of support. I have tried to get back to as many people as possible, but I did notice there was a few on YouTube as well. So when I get a minute to myself, obviously this is a busy time for me at the minute. When I get some time, I will go through as many of these messages of support as I can. I do appreciate that. As well as, so obviously I shared the news about my fiance. According to her, she thinks that she might only have a week or two left to live, which is obviously a tough thing to process. As well as that, yesterday, when things like that start happening, you start thinking to yourself, okay, as a bit of a comfort, you start thinking to yourself, well, at least I've got this, at least I've still got this, at least I've still got that, leaning into gratitude. Well, on Sunday morning, I also lost my biggest source of income through no fault of my own. I'm happy to hold myself accountable when I've made mistakes, but I've lost my biggest source of income, which was making me a significant amount of money. So it's been quite a week last week, but I show up regardless. It doesn't matter to me what my foundations are strong. It doesn't matter to me what happens in my life in terms of how I operate. Of course, it affects me, but the walls of Jericho can fall away around me, and it won't make any difference because my foundations are strong. Okay, and I hope that inspires many of you to do the same. No matter how much you lose in life or how much you are about to lose, whether you fall apart or not, it's completely up to you, and that will be solely determined by the way that you think. And I'm not going to sit here and say I find it easy to think, oh, it's all right, we'll just carry on. Of course, I don't find it easy, but I go through a bit of a mental process, mental checklist. Like, for example, yesterday when I lost my biggest source of income, I didn't make one emotionally charged decision. I sat there and thought, okay, well, of course I was affected by it, but I thought, what's the best thing that I can do in this scenario? What's the best thing I can do in that scenario? And we just operate accordingly, okay? People's lives spiral out of control, not because they're stupid or, because of things have caused it to happen. It's because their emotions are stronger than their ability to make rational decisions. Okay, if you can always be the sort of person who has emotions but lets your rational side have the stronger influence and the last influence, then you'll never go too far wrong. But anyway, let's break these pairs down. So I've got 2 pairs on watch today. They may or may not be ready. We shall see. So I would say the one most likely to be ready, just because it just looks just because there's a little bit less distance between the area of value than there is on CAD Yen, is pound yen. Okay, so we have this expanding pattern here. So I'm just zooming out to the higher time frames. If we just zoom out to the weekly, you can see we've had this 1, 2, 3. Look at this weekly candle. That is a very, very bearish candle. We wick above the area of value, as we often do on the higher time frames, plummet to the downside, and now we've got potentially that kind of start of that morning star formation, the bullish move, the wick with the small body, and then potentially the follow through. I'm not necessarily anticipating a move all the way back down to here, because you can see we found liquidity here. What this could be, although we don't need to know this, we don't need to know what's going to happen next to make money. This could be a shorter term move, just sort of down to these areas as I've got it marked up, to take out these highs here. Give us that. Maybe we do push down and we end up taking out this low, this low near miss too. We don't need to know that. All I'm really interested in is the fact that we had the 1, 2, 3 break above, push back in. So then I start drilling down. 3 progressive candles. Okay, it's not one big candle. And the reason I say that is because a lot of time when it's one big candle, sometimes these can retrace just as quick. We've had progressive, impulsive price action. Easy for me to say. What I also like is the fact that we had a little gap there. So this was implying that there was liquidity there because we gap to it. We come back up, fill the gap, break above, and push to the downside. So now I'm basically just looking for an impulse correction continuation. It's typical for us to see 3 candles before we get the stall in price. So that kind of makes sense contextually as well. Okay, I also like the fact that we have a series of gaps here. So again, we don't necessarily need to come all the way back down to here, because the reason I've got this marked up is because we had all this volume here, okay, and this was the retest of the back end of this volume, right? So this could actually be where the volume is, because it's an area of significance. It was the little sharp move after we broke out of all of this volume. A lot of the time that's where a lot of volume is. And notice that we near missed. The clue might be the fact that we near missed to it, and we near missed to the near miss. So we have a series of near misses. If people are getting long here, there's likely a series of stop losses here. And as I said, if we've got a little sharp move after the breakout of all of this volume, there's likely a lot of stop orders in that area. So if we get what I'm looking for today, it's likely that we will plummet to the downside. Maybe not, I'm sure not in one candle, but we'll get the impulsive momentum to the downside as price comes down to try and take out all of that liquidity that's sat there, okay? So now I'm asking myself, how do I get involved in a potential short trade with this thesis in mind? So if we just drill down, we can see, what do we have? We have this little, we have the push down, we have the little correction there, further push down, we have this correction there, push to the downside. We can say you can see we have this kind of structure here, which I think retests, just about retests the back end of that. Okay, so that's potentially a completed move. We have the little footprint there, and this is likely where the volume is, because what have we done? We've near missed to it. Okay, if people are selling here, where have they likely got their stop orders? Just above here. Okay, and we're kind of retesting this general area as well, which I quite like. So what does that mean? That means I'm asking myself, what is my entry criteria for this potential trade? So the first question I ask myself is that little structure that I just showed you. What's the highest time frame that I can see it on? And I can start to see I can't necessarily see this bit so much, but what I can see is I can see the lows. And if we were to push up here, I would be able to see this high. And if we rejected from here, the high that we actually, which was actually the rejection. Okay, so that means that I could see the structure on the 4-hour chart, which means that my entry criteria for the 4-hour chart is actioned, which means, just get that off the chart a minute. What I'll be looking for is I'll be looking for price to push up into this area, tap into that area of value, and then I'll be looking for a 4-hour risk entry or two. So a 4-hour rejection, high test or retrace, or 2 1-hour rejections. Okay, or if that doesn't happen, we don't get it or I miss it, whichever, I'll be looking for the push down and then a 5-minute flag, 6 to 8 corrective 5-minute candles as a minimum. And then I would look to get short on the break. We would have about 4% to work with down to there. I'm not too bothered about this but at this point, because I think the amount of volume generated there would cause price to smash through it. Okay, just because of the size that this structure would be at the point of completion. I'd be targeting the first sharp move, the first solid inflection point there, which would be that area there. And if we were to measure this, I'm pretty sure, I haven't done this, but a lot of the time we can sort of eyeball it and get a rough gauge. There you go. What do you know? Lines up mathematically once again as that impulse correction continuation, which just so happens to conveniently line up with that low, which is often the case. Alert set there. If it doesn't trigger, I don't need to look at this pair. So CAD Gen, it's going to be a similar deal. This just looks slightly further away, even if it does actually happen. I do actually prefer this one a little bit more in terms of the fact that, you know, we've kind of already retested that low, whereas with CAD Gen, we haven't really retested that. We ever so slightly broke above, but there's likely, if you think about this, a zone of orders. If people, when they start selling here, believe that this is now, what is it? What would it be? Resistance. Okay, there's likely a zone of orders sat just above there. What did we do? We kind of near missed to it. There's likely a lot of orders sat just there, and it wouldn't surprise me if we push back up to do that. So I'm looking for the same thing, but before we get to that, let's just zoom out. Let's do things in the right order. So if we just zoom out, we have, if I just take that off the chart a minute. So it's a similar deal. We've got that follow through candle. We broke above this high, pushed to the downside. I do kind of like, on this one, I do kind of like the fact that we have more bearish momentum in the previous weekly close. Once again, I'm not necessarily anticipating a move all the way down to here because we've already tapped below this area. We've got the 3 progressive candles there. You can see the fourth one is corrective, which kind of ties in with what I was saying previously. We have, what do we have? We have a series of near misses to this area, another near miss to that area. Likely a lot of, when people were selling here, likely a lot of people put their orders just above here. We tap that area, move to the downside. If we just zoom in, now you can see what I do like about this is I can kind of see the whole structure, including the area of value on the 4-hour chart a bit more clearly. And basically it's just the same thing. We have that impulse correction continuation. It looks like a failed attempt to go long there. We kind of tap that area, failed attempt to go long. I like that because when we get these failures of a structure, the move in the other direction tends to be very impulsive once it forms, which would be that. So what I'll be looking for is the same thing again, is same criteria. The 4-hour rejection or two 1-hour rejection candles. Just take a hair off my microphone. Or I'll be looking for the tap into the area and the push down and the flag, and then I'll be able to manage it. This forecast was done last night. We've pushed a bit lower. I'll be able to manage it down to there for about 5%, but I would actually be targeting that first solid inflection point, the first standout liquidity point there. And in this area, in this instance, we have, let's just measure this because that's probably more relevant. That kind of lines up as well. So even if we didn't fulfill the first impulse correction continuation, in terms of this, the move down from here, followed by the correction, we've still got, that solid profit potential there. So that's what I'm going to be looking for, folks. And if none of these things happen, then so be it. But anyway, I hope you've enjoyed this video, and I'll see you again in the next one. Thanks for watching.